Hey everyone, now that we have the exit poll results, it clearly suggests that all stars are aligned for a multi-year structural bull rally in the Indian stock market. Now today everyone is talking about hot themes like defense, power, PSU, infra, railway that would benefit from government spending and favorable policy. However, nobody is really talking about valuation. I feel that majority of hot themes today have already rallied a lot and there is very less valuation comfort. Now they might continue the rally, but in that case, EPS growth has to sustain. If the valuation expansion is not supported by earning growth, it can create a trap. So I'm very careful with hot themes. It's okay to invest some money in such hot themes as high risk and high reward game, but as a long-term investor, I'm more interested in buying stocks that have more value. And that's why one sector that is neglected and I think is looking very attractive is private banks, including small finance bank. Just to give you an idea, over the last 1 year, while Nifty has jumped around 25%, private bank index is up only 10%. And the biggest reason is FI selling. Private banks are the most favorite sector of FIs, and over the last few years, FIs are on a huge selling spree. In fact, I was looking at the data and found that since last 3 years, FIs sold investment worth 5.65 lakh crore rupees. Now that's a lot of money. And a big chunk of that money is invested in private Indian banks, which is one of the biggest reasons why private banks have underperformed. But if you look at the quarter-on-quarter performance of private banks, it has been decent. So due to decent EPS expansion and correction consolidation in share price, the valuation of Indian private bank is looking attractive. And it also includes your small finance bank. Now, one of the reasons for FIs selling their investment from Indian market is concern over election outcome. But now after the exit poll, we have a clear indication that BJP is coming in third term and FIs have to come back to India. They can't ignore it. Yes, you can always debate on premium valuation of Indian stock market, but the fact is that India is the fastest growing economy in the world and showing a lot of potential over the next few decades. So Indian market will command a premium. And now that there is a clear indication of stable government, the reforms that started in first and second term would continue the momentum in the third term. And that's where I think FIs would come back to India and the private sector would be the biggest beneficiary of FIs investment in the Indian market. The good news is that majority of these private banks are available at reasonable valuation. And that's why I believe that private bank sector can be strong beneficiary of BJP getting into third term and FIs flow into the economy. Let me show you the current valuation of private banks and FIs stake in each bank. So this is the list of private banks and small finance bank that I've compiled. And here you can see the FI holding. For instance, SDFC has got 47.8% stake, ICICI has 44%, Axis has highest 53.8% stake, Kotak has 37.59% stake. Even your mid-tier banks have got a decent amount of FI holding. And for that matter, even your small finance bank like AU, Equitas, Ujjivan have a decent amount of FI holding. Clearly signifies that FIs have an inclination towards the private banks of India. And obviously once they would come back to Indian market, they would want to increase their allocation in private banks. So that's where I think private banks are very well placed. Here I just want to clarify one thing, that if you look at promoter holding, it is showing very low promoter holding and a lot of people get confused, right? So one thing is that SEBI has a norm that private banks cannot have more than 26% allocation after a certain point in time. And that is the reason Kotak has highest 25.9% stake, and in fact majority of them have even 0% stake. SDFC, ICICI, Axis is just 8%, then Yes Bank 0, Federal Bank 0, RBL Canal. So majority of them are 0%. But as long as the bank has got a high FI and DI holding and public holding is on lower side, it should not be a concern. So please keep this in mind. Next thing I want to discuss is the asset quality. I have compiled the net NPA of latest Q4 quarter of all the private banks and small finance bank, and except for Karnataka and South Indian Bank, all private banks have NPA below 1. That shows that they've got best ever asset quality. And for that matter, even your small finance bank have got a very good asset quality, especially your AU, Equitas, Ujjivan, and even Utkarsh has just 0.03% NPA. So asset quality of these private banks and small finance bank is top notch, right? So that gives a lot of confidence. If you look at the profitability, which is measured via return on equity, for top tier bank, it is very good. Axis has got the highest ROE of 20.87%, and mid-tier bank ROE is on lower side. And if you look at it, your small finance bank ROE is also decent. Now, some of the small finance bank have got very high ROE like Ujjivan, Utkarsh, And one of the reason is because they have high exposure to microfinance loan, which is more profitable segment, but that comes at a risk. Okay, so just want to make sure that you understand this. Then very important part, which is the EPS growth. So I have tried to understand how is the earning growth of these banks over the last 1 year. And here's the list. HDFC is pretty flat, and the reason is because they did merger of HDFC Bank with HDFC Limited. So year on year comparison of EPS won't be right. ICICI EPS has grown at a very good rate of 29.3%. Axis is showing exponentially high 143%, but one of the reason is because they've acquired Citibank. Then Kotak is good at 22%, IndusInd 20%. Yes Bank has been a very good story so far, 73% EPS growth. IDFC is on lower side, 10.9%. Federal Bank 6.56%. Karur Vasya has been a great story, 44.6% EPS growth. RBL Bank is also showing a very good EPS growth of 35%. Karnataka Bank is negative, but South Indian Bank is also looking very good at 38% EPS growth. And for that matter, even your Equitas Bank has grown at 36% EPS. So earning growth, if you look at it more or less, for these banks is very good. In fact, Suryodaya Bank is looking like a turnaround story, and look at the EPS expansion, 177%, right? As compared to the earning growth, if you look at the valuation. So first of all, if you look at the PE ratio, all except for Yes Bank, all of them have a PE ratio below 20. In fact, your top banks have a PE of 17, 18, Axis is just 14, Kotak is 18, and then you have Federal Bank at 9.9. These two banks, your Karnataka and South Indian, have PE of just 5.5. Of course, you have to look at other factors also, like your return on equity or the way bank is performing, but it looks like South Indian, Karnataka Bank could be a good turnaround story, and even your other small finance bank have got very low PE. So valuation comfort is certainly there, but again, you can't just look at PE ratio in bank, you got to look at price to book as well. And that's where I've compiled this list of current price to book, compared it with its peak price to book and the 5-year median price to book. So that would give you a good idea where does the current valuation stand as of today. So HDFC, for example, has got a price to book of 2.8. It commanded a peak price to book of 5.8. So the from peak, the valuations are down more than 50%. Likewise for ICICI, so ICICI there is not much change, it's just down 5%. Then Axis Bank is at 2.7 and down 16.5%. Kotak is at 3, down nearly 50% from peak valuation. Even for that matter, your IndusInd is down 43% from peak. Yes Bank is down 27, IDFC is down 20%. So there's a very good correction from the peak valuation. Now, if you look at median valuation also, there's a very good correction from median 5-year. For example, HDFC today is at 2.8 price to book versus median price to book of 3.7, which means HDFC Bank is today trading below 24% its median 5-year price to book. That gives you a very good valuation comfort. ICICI Bank is about 12% its median, Axis is about 16%, but these are decent valuation in my opinion. Your Kotak is again an exception, which is down 28% from its median PE price to book of 5-year. And if you look at overall price to book also, some of these mid-tier banks command a very low price to book, near to, Yes Bank 1.7, IDFC 2, Federal Bank 1.6, Karur Vasya 1.8, RBL is just 1.1, Karnataka Bank is just 0.8, South Indian 1.1. So there is earning growth and the valuation comfort is also there, which gives a good, comfort in terms of valuation. And that's where I think private banks are very well placed. In fact, if you look at percentage change in last 1 year in share price, there's not much return. For example, your HDFC Bank is down 2%, ICICI Bank has given 22.5% return, a decent one. Axis has given 29% return. Kotak is down 11% in last 1 year. Ind is up 17%. Yes Bank has given 45% return. IDFC is just 6%. Federal Bank has given 29% return. Karur Vasya has been one of the top performer with 83% return in last 1 year. RBL is up 51%. In spite of that, if you look at the valuation, its price to book is just 1.1 and EPS growth is also 35%. So looking very, very promising. For that matter, even if you look at Suryodaya Bank, its price is up 25%. But if you look at the valuation, its price to book is just 1.3 and its EPS is expanded at 177%. So overall, this gives you a good picture in terms of how is the earning growth and how is the valuation, and you can clearly see that there's a very good valuation comfort in these private banks as well as small finance banks. So that's my viewpoint on private banks. As I mentioned, themes like defense, power, infra, capital goods, PSU, where government has a lot of focus, can continue the outperformance, but the valuation comfort is very low as these sectors have already rallied a lot. So they need to consistently grow the EPS at high rate to sustain the high valuation. Whereas private bank valuation is already very reasonable. And if economy does well, private banks are bound to do well. Now tell me in the comments, what is your take on private banks? And which sector do you think is still looking reasonable in terms of valuation and can outperform in FY25? If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.